Good evening, this is Nick Inman from VolumeProfileTrader.com on Tuesday, February 21st, and the market really flat day today, despite the fact that the news from China and Greece over the weekend. Now with that said, the uptrend remains intact. However, the possibility for this to pull back or trade sideways over the next week or so is probably pretty likely. That's what it tends to do. We get a vertical move, sideways consolidation, just like we got at the beginning of the year. So that's something to look for. We got our vertical move, look for some type of sideways consolidation, and then you would look for a bounce somewhere near the bottom end of the range. Now that doesn't mean that it's a pullback. I mean, it may be 10 points lower from current levels, but it's just something to be aware of. Now with that said, if it starts to break this trend line that we've formed since the beginning of the year, then you would look for a more, not more of a severe pullback, but you could see, and you could go back to the summer of last year, and then people will start talking about double tops or stuff like that. Now, one thing to say is short sellers now have a level to trade off of if they want to start pressing this market to the short side. I'm not saying they'll be successful, but it's just something to watch out for from the long side. So overall, the S&P still looks good, and it still looks like it's going to drift higher. I'll bring in the intraday chart. January's point of control finished at the top end of the range. We bounced off of that. February's point of control for now is in the middle of the range. So you can see there's really no volume support until you get around 1347 or so. That's something worth looking at. However, we are at the value area high for February, and we have a little bit of volume at these levels, which we bounced at the end of the afternoon. That's just something to be aware of. NASDAQ, it looks a little similar to the S&P, a little more steeper, or I should say the uptrend's more steep than the S&P. Looking at it on an intraday chart, we could come back. It looks like we're going to be in this range. Value area high looks to be the top of the range for now, 2600, and the bottom end of the range I would look for around 2560 or so. That's the point of control for February. We still have a couple of days, 5 or 6 trading days left in February, and let's see, I will tell you how many. 6 trading days left in February, so that's just something to keep your eye on. And now we're going to go into some stocks that we've been talking about. We'll start with American Express. The uptrend remains intact. On any weakness, you do want to be a buyer on American Express. If you look at MasterCard, continues to do okay. Visa continues to do okay. So I do think there's no reason to sell American Express. I do not own Visa or MasterCard. ConocoPhillips would like to think that this is going to try and make a breakout and push up towards 77 to 78. That's the value area high for the year, for the last 52 weeks, I should say. And basically, we'd be looking for a breakout from this huge high volume range, from 70 or so on the downside to 73 on the upside. We're on the top end of that range. We had 2 huge, well, really 3 huge volume days in a row. 2 were buying days that led to price action to the upside. So that's something to be aware of. ConocoPhillips did relatively well today compared to the S&P, so that's something to be aware of. Now, oil, we're at the value area high for oil. I'd like to say that it's going to take a pause here, and we're going to get some type of rollover or test of basically the breakout area, 103, 102 or so. Now, if that happens, I would assume it's going to be a buying opportunity, and your target would be back up towards 106. And you can see from 106, if we look back throughout the year, from there you kind of had your blow-off top, and that's just something to be aware of. Look for some type of pullback to get more involved in oil if that's your thing. If you're looking for a name that resembles oil pretty well, I would say ConocoPhillips is your winner. Sticking with the oil theme, Halliburton, long this. I've been long shares, but what I did actually last week, I believe it was last week, on one of these days, I exchanged 75% of my Halliburton position to ConocoPhillips, which was a pretty big shift, and ConocoPhillips is one of my biggest positions. But then on this down day, let's see, the 16th of February, I bought some at the money. I believe they were the 36 strike call options that expire, I want to say in the summertime, May or June, one of those months, whatever the summer month option expiration date that's available is out. And the reason why is because we're getting higher lows off of this, basically this trend line support, and then it came back down to the point of control, and we had a really nice bounce on pretty good volume, not great volume, but pretty good volume. And what I liked about it was you could easily define your risk, and it put your stop right below. And thankfully, the next 2 days we've seen positive price action. So I would look for a continuation higher in Halliburton, up 2% today, which is great. Dividend comes out on the 5th, and that's something to be aware of, but I wouldn't be surprised to see another $3 move higher in Halliburton. Las Vegas Sands up nearly 1% today. Let me get rid of these drawings for you. I still believe that this is going to make a really nice move higher over the next year or so. The last time it hit this 54 range, this is a 52-week high today, by the way, but last time it was above this level was basically the blow-off top almost a year and a half ago. And what we're looking at now is we're at the top end of the range, and that's definitely something to be noteworthy of. But this is breaking out of a base that's been forming for the last year and basically a year and a half. And that's important. That shows you that any weakness should be bought, and you should look for a nice move higher in Las Vegas Sands. MGM had a big reversal today. I would look to be a buyer around the 13 level, and hopefully you can scoop up some MGM there. And Wynn, which actually looks the best, huge volume day today. You can see it's holding its value area. I wish I could say that I got in at these levels, but I didn't. Now, with that said, I do think, well, my hopes are we get some type of pullback back down sub 115. If we do, I think you grab that and look for some type of move higher. I would say you could actually start scaling in at these levels, buy a fourth of a position. If it comes down to $3 or $4, buy another fourth, and you'll probably find yourself in the next couple of weeks you have a decent sized position in Wynn with a cost basis somewhere around 115 or so. With a target, you would be looking for a move up towards 130, 135. It's not a huge move, but it's a decent sized move. Chesapeake Energy, we're long off of these lows, around $22. Chesapeake it came out with earnings tonight. Earnings, it was expected to come in light, which is probably why Chesapeake has been declining for the last three or 4 months, maybe 5, who cares, doesn't really matter. You could really say the last 6 months. But the point is, if you look at a 2-year chart of Chesapeake, you can see there's a ton of volume at this lower end, and above that there's not a lot of volume, and the likelihood of Chesapeake pricing in a lot of this bad news, which is having a lot of natural gas, and now they're stopping that production, going more into liquid, and we should see some positive over the next 12 months, some positive out of Chesapeake in that area. Now, if we look at the intraday chart over the last 90 days, actually this is the last 180 days, what's important, let's try this again, is you have the point of control at the bottom of the range that shows you that we're bottoming, and we're looking to be buyers on weakness. Now, after earnings, it came down. I mean, this is what it came down after earnings. So it wasn't a big mover after hours, but you would look for some type of pullback down maybe towards 23.5. That's where you want to start scaling in if you're not long Chesapeake Energy. I would still look for a decent move to the upside. My first target would be back in November's point of control range around mid-25s, and then you would look up towards 27, 28. So there's still room to run in Chesapeake. You just have to be involved. Devon Energy, this broke out. I caught this on the day before earnings on the breakout. Flip that option position for a double on earnings and then entered a 75 by 80 call spread. I believe it expires in March. So it's profitable, but it hasn't realized the full profit of the spread. I want to see this thing continue to push higher. Basically looking at these last few days, and I'll bring in over the intraday chart, want to see it really hold this range, and if it does, that's good. I'll have no problem staying long. However, if it starts to roll over, I'll probably scale out of that option position and maybe, hopefully for a profit, and maybe roll it down, or I should say down and out to the summer months, and maybe do a 70 by 80 call spread, depending on what I can get for it. But I do think Devon Energy continues higher, but the possibility for some type of pause is likely due to the big run it's had in the past few days. Okay, gold. Today I bought, and I wish I did this the other day, before the weekend, but I bought some calls on the GLD, and I bought the 169s expiring in, they're the March quarterlies, I believe. Bought them for $3.50, and they actually have a pretty good profit on them right now, but I'm looking for more upside in gold. It's good to see that the price action coincided with my belief that gold could push higher. We are at this point of control for the year. It was at 1523 or so, and then it shifted up towards the 1722, 1730 range. You can see we had a nice base at those levels, and no close was below those levels, and now we're starting to push above that on pretty good volume. That's something to be noteworthy of. I don't think you want to be short gold. I think you want to be long gold, with the likelihood that we're probably going to see north of 1800 very soon, and I would assume 1845, which is the value area high for the year. Silver, it's really pressing up against this 3430 level, this point of control for the year. It wants to break out. If it does, we have a little, well, maybe, if this is what you want to call it, an inverse head and shoulders pattern. Your target would be from 26 to 34. That's an $8 move to the upside. $42 value area high for the year. $41. You see we have nice volume from 39 up to 41. That's your target for silver if we do get that move, and it's important if you want to be involved. Just to show natural gas, because it's been trying to form a bottom. We have good volume at the bottom end of the range, and you can see it's been good support. But now we're at the top end of the range. We have potential lower high. I'm not saying that this is a bottom on natural gas, but if you look at a name like Chesapeake, natural gas prices that move higher over the next couple of months will do nothing but help a name like Chesapeake. So that's just something to be aware of. Of course, I'll cover Apple. Apple has done fairly well since its big reversal day. Now, this was a big washout day. A lot of longs got shaken out, and this is why you don't sell all of your position, especially shares of Apple in this example, on any given day. You don't want to sell all of your shares. Rather, you want to stay involved on a name like this. I don't think that 526 will be the absolute top for Apple, Therefore, you shouldn't sell all of your shares of Apple. I wouldn't be surprised if sometime in the future Apple reaches 600, 700. It's not the inevitable, because anything can happen, but Apple continues to perform both on the stock and the company fundamentals, and it's not showing that it's going to slow down. They have great products, and people love them. Businesses love them, and there should be more upside to Apple. Now, with that said, the ceiling on Apple right now is this 529 level or so. I'm going to bring over the intraday chart. February, you can see we have great. This is why volume profile works. You have your move higher on Apple, and after the move higher, you have a big topping pattern, and while this happens, volume is forming, this value area is forming, and where do we fall on Apple? Value area low was the low on this recent downswing. What we consolidate, the point of control was at this 496 level. We pushed above it, and then point of control formed at this 500 level. What did we do today? We kept pushing higher. So, yes, we are at some volume resistance, or I should say the top of the high volume area in February. But I would suspect that Apple has a strong likelihood to push up towards 520. It's hard to say get long Apple with only 1% reward, and your stop would be back towards basically 500 on Apple, right below it. So I can't say that you need to be buying Apple, but on weakness towards the 490 level, I would be strongly considering getting long Apple for a move back up towards 520 or so. Now, just to show, Dell posted earnings. The market didn't like it. They missed. With that said, I think if you can pick up Dell around $17, $16.75-ish, it's something worth considering. This is a breakout, and we have made new 52 weeks highs. I would expect buyers to be lurking in Dell tomorrow or over the next week or so, and that's probably worth noting. Wendy's, I still think that over the long term, I really don't know much about their fundamentals, but the likelihood of Wendy's moving higher is probably pretty likely. That's just something to point out. PriceSmart, it's right at the point of control for the last 52 weeks. Look for a bounce. If we get a bounce, you can easily place your stop right below the bounce, which is probably going to be right below $65 or so. IBM pushing up against a breakout, something to be aware of. Intel continues to work, continues to move higher. Johnson Controls taking a pause today at the top end of the range, but I still like this to the long side. SanDisk, keep an eye on it. This 46 to 48 level matters, and it's something you're going to get a move one way or the other off of these levels. Keep an eye on it. Like the fact that the 200 days right below it shows you that basically you have a floor on this name. Now the ceiling for now would be 53, but you do have a lot of regret from earnings. Basically anyone, take the highs that we've seen, 48.64. So this is the I want my money back crowd. They're trying to get their money back at a small loss or a break even. That's something to be aware of. Now, if the market, or I should say if SanDisk chews through that supply, then we should have no problem pushing towards new highs on SanDisk. Tech Resources, this is a buy right here, right now. $37.50, around there. Basically the recent lows. That's your stop. Value area low for the year. If you do get stopped, if this comes back down, that's fine. Maybe your choice is to buy smaller, but I do think this value area low holds, and it's something to be noteworthy of. One thing to mention is point of control for for this recent range that it's been in is right below current prices, $38. We've been bouncing off that. That's good news. I do think you can take a shot at Tech Resources, which brings me to Freeport. I would like to say there's more pullback in Freeport, but maybe there's not. But if you can get Freeport more towards $40, I would say that's where you want to get it. Cliffs is rolling over against $70. It's hard for me to say that you want to be, look to buy it down towards 60 because that is a pretty severe move. But there's really no trend line to go off of, so there's nothing like that. Basically, stay away from cliffs. I don't see anything positive around it right now. Amazon, I like this. I have to say I do, and the reason why is because I think the risk reward is in the favor of the buyers. Hopefully on some weakness so you can get it, but if you can, I would gobble it up. And the last name I'm going to cover, Bank of America, is the last name I want to cover, and it's just the banks in general. Really, I hate to say this because it's had a nice run and we've been doing nothing but staying at the top end of this staunching channel, no reversion or anything, but the volume indicates that we're at the top end of the range and we're probably going to see some type of pullback in the banks. I wouldn't be surprised to see $7 again on Bank of America. Now, with that said, I do think weakness on banks should be bought. And you should, if you aren't long banks, I'm not long banks. I do have a position in one bank, Bank of New York, and long some calls that expire in the summer, looking for a move up to 25. But even on a name like this, it's at the top end of the range. And really all you're looking for now is some sellers. But wouldn't you want to be a buyer against the point of control versus a seller just at the top end of the range? And I would hope you would say, yes, I'd rather be a buyer at the point of control because you can easily define your risk. Look at JP Morgan, close to the value area high, though the volume's a little messier. It's hard to indicate, but Goldman Sachs, the volume, top end of the range. Now, if we break through these levels, call it 120 on Goldman, you're going to push up towards 130, 135, maybe 140, but that's a stretch. And you're going to find prices, you're going to see the market really explode higher. But I have to say that the likelihood of this pulling back, you look at the XLF, and you can see this is probably the best picture. It's pushed through this low volume. So what I would expect is either we stay in this range, or we hold these lows, and we're going to just chop around for a while, or we're going to see some type of, if we do get some type of severe sell-off, I would view it as a buying opportunity in the bank. So anyways, this is a pretty long video. Gone on enough. I hope this helps. I hope it gives you some direction and some indication. Remember, watch the dollar. If we start to get a bid on that and a sell-off, coinciding with the euro and equities, it's probably right to take some profits because the dollar is at the bottom end of the range. It's back at, close to the bottom end of the channel. I'm going to bring over the intraday chart. You can see February's point of control right in the middle. We have point of control for the last 6 months right at these levels. So that's something to be aware of. If we start pushing below that, that's great. The market probably continues to drift higher. If not, look for a market pullback. But you want to get involved in that pullback. So anyways, take care. Have a good night. See you tomorrow.